Good morning, everybody. Welcome back to Morning Markets on Friday, the 29th of May. Last trading day for the month of May. Another eventful month in markets with, I suppose, a slight change in how the market has been focused, with starting to look at some of the pre-pandemic factors that have been important to markets. And by that I mean looking at Brexit, the ongoing negotiations there, and also the increased rhetoric between China and the US, which has continued to ramp up and impact markets yesterday. What did we see in asset markets yesterday? We saw, following on from, I suppose, the strength that we saw in Asia, Europe and the UK, both performing well, both markets up over 1% at the close. That followed into the US, where US markets were all up over 1% through the majority of the day. But they did sell off into the end of the trading session in the US, a function of an announcement from the White House that President Trump would be speaking today, Friday, on the US relationship with China. There's no indication as to what that means or what will be discussed as yet, so we'll have to wait and see. But clearly it does bring the political risk higher up the agenda, and with the trade wars that we were all very familiar with last year very much still fresh in everyone's mind, there is an economic consequence of the rhetoric, and that just needs to be understood. But also we need to see what's said today in terms of the relationship. And another interesting, I suppose, twist to what has been coming from US and US politicians over the past number of days, we did see President Trump suggest that he would like to take some action against social media companies, which I don't know about you, but it is slightly ironic given the role that social media has played in his style of politics. So that will certainly be an interesting one to see how it plays out over the coming days and weeks and indeed months, particularly as we roll forward towards the US presidential election in November. Turning to other things that we were discussing this morning, we touched briefly on the continuing claims, the unemployment numbers from the US, which came in at 21 million. Interestingly, and I think this is quite an important point to observe, that is a decline from the 24.9 million last week. So that does suggest that hiring and employment conditions in the US are gradually starting to improve as the economy starts to reopen. So that's something to continue to monitor in coming weeks, to see that trend continuing to come down, which clearly would be very supportive given the role that consumption does play in the economy. Other stats that we looked at this morning were two industrial production numbers out of Asia. Both were relatively weak in terms of what they decline month on month, both from Japan and from South Korea, where Japanese industrial production declined 9.1% month on month and South Korean over 6% month on month. That's important because those are two economies that are very much tied to the global economy and global trade flows. So what that is telling us, for the obvious reasons, is that the global trade is still not starting to kick in. It'll be interesting, I think, to observe these numbers next month to see if both the improvement that has been evident domestically is starting to then feed into more of a broader recovery in global economies. We'll maybe get a bit of an indication of that over the weekend when we do have purchasing managers indices from China, both from the manufacturing and non-manufacturing. And that'll hopefully continue to show that improvement and trend that we discussed last month, but we'll come back and we'll look at that on Monday. Other things that we've just looked at briefly this morning was just the ongoing improvement, and by that I mean yields coming in for sovereign bonds, particularly as it relates to the Eurozone, the likes of Italy, Greece and Spain, etc. And that just continues to build on the announcement a couple of days ago from the EU in terms of the package that they're putting in place. Obviously it still needs to be voted through, but that is something that I think the market is focusing on at this point. And that was also evident yesterday in currency markets, where we continue to see the strength of the euro against a broad base of currencies, and indeed it's back to a 2-month high relative to the dollar. So that gives you some sense of how the market is viewing that announcement, albeit there are political risks attached to it over the coming days and getting that voted through. That's it for today. Please join me again on Monday and we'll recap what's happened over the month of May. Also today, please look out for the True Potential Doing More With Your Money podcast, which will feature a number of my colleagues from the investment team. And then also just our weekly article, which will come out later today. So a number of things to keep your eye out for. Please have a read of those and come back to us with any questions. Thanks very much. Bye.